Thank you, Allie. So again, appreciate everybody. My name is Danny Fitzgerald. I'm with the San Diego and Imperial Small Business Development Center. These are our monthly Meet the Lenders calls, and we appreciate our panel again today. We have Fernando Ponce from Primary Funding, Fred Crispin from United Midwest Savings, Rosalinda Delgado from Accessity. We have Damian Mikulik. I'm sorry, I probably just butchered your name, Damian. That was pretty bad on my part. We have Robert Cafaro from Banner Bank, and we have Miriam Baltis from CDC Small Business Finance. So happy to have everybody, and so appreciate you all getting on. Again, we're the Small Business Development Center. We are a grant-funded program from the U.S. Small Business Administration and the state of California to provide no-cost business assistance. We have about 125 expert business advisors in the two-county region that provide no-cost service to help people everything from start their business to access capital, improve their finances, improve their marketing, access government contracts, et cetera, et cetera. So happy to have everybody on the call today. And always thank all of our sponsors, which many are on today, including CDC Small Business Finance, United Midwest Savings, Pacific Premier, Banner Bank, Primary Funding, and then LendSpark and Marble Bridge Funding as well. So I certainly appreciate everybody. May has been Small Business Month, and we were able to celebrate some excellent small businesses yesterday with the Small Business Administration for their annual awards. It was nice to have everything back in person. We're also hoping, we're also anticipating being able to actually have this event in person in San Diego, in Mission Valley next month. Details will be forthcoming. So looking forward to that as well. And then of course, we're going to continue our monthly online programming because that allows some additional folks, additional lenders to be able to join too. So wanted to kick off though first, just allow Lucy Montgomery from the SBA District Office to provide any updates the SBA has.
Hi, how are you? I'm Lucy Montgomery, and there is some big updates from the EIDL program this month, and we're sorry to report that the EIDL program has exhausted its funds and that no more loans will be processed. If you are on this call and the EIDL team has reached out to you for documents and information, please respond as soon as possible in cleaning up and ending the program. They're trying to fund as many loans as possible. If someone cancels, then maybe they can get you funded, or if more funds are appropriated, which we feel honestly is unlikely at this point. If you have not signed loan documents for the EIDL program, it's very unlikely you will be funded. So, okay, what do you do now? And although the congressional appropriations for the COVID EIDL program have been exhausted, the SBA will continue to help small business owners by utilizing our existing resources. In short, the SBA is transitioning back to its regular loan products. And a lot of you may have learned about the SBA as a result of COVID, and this would be our direct lending. But financing available through our lender partners, such as those present on this call, is how historically the SBA has.
Oh, Lucy froze. So in short, I know where she was going. Are you back, Lucy? There we go.
If I'm back now, I just want to know, I want you to know that these programs are open to you, and to contact these lenders, that the SBA doesn't do this. And most importantly, we recommend you consider speaking with your SBDC advisor for help with capital access. It is our experience that working with an SBA, an SBDC advisor significantly,
and I left her a message.
Significantly increases your chances of a yes from a lender. We know it's a challenge, but we encourage you to use these resources. Please contact your SBDC advisor for help. Thank you, and sorry about my internet connection. Must be the rain.
That's it. We'll just blame the rain. It's like the traffic in San Diego. No one, the internet deals as well as drivers in the rain. And so, yeah, see, those who are in San Diego are chuckling because we all know that problem. And so appreciate that. And so again, as always, the SBA District Office is also an ally for you. And yes, and the SBA products are certainly, they've expanded some of what is available and what they're doing. I know some of the lenders here can absolutely talk about those as well, and we can help guide you for those. And then beyond the SBA products, I know that there's some other low interest loans that some of the lenders will talk about here today too. So excited to get into our panel. We're just going to start off as always with go ahead and introduce yourself, your organization, and we'll kind of roll from there. Why don't we start with you, Mr. Fred?
Good morning, everybody. My name is Fred Crispin. I'm Senior Vice President of United Midwest Savings Bank. I manage the small loan program, SBA small loan program on a nationwide basis from Panama City Beach, Florida. We provide working capital loans under the SBA 7A program from $20,000 up to $150,000 for startup and existing businesses. Probably 90% of the loans we fund every month are pure startups, meaning the day we fund that loan is the day the borrower is opening their doors to start selling widgets or services or whatever they're going to do.
Fantastic. And yes, absolutely. As you're starting your business, especially as you're opting into franchise or other programs, Fred's your man. Damian.
Good morning. I'm Damian. I'm a commercial banker with Pacific Premier Bank. We're a 22 billion asset company, and we really just kind of focus on services and lending to small and medium businesses in the Midwest region. Our lending ranges from, we have a 5,000 program up to 50 million lines of credit and real estate.
Awesome. And Rosalinda.
Hi, everyone. I'm Rosalinda with Accessity. I have been with the organization for about 10 years. Accessity is a nonprofit mission-based lender. We have been serving the Southern California region for almost 28 years. We offer a startup and loans to startup businesses and growing businesses up to $100,000. We serve the regions of Los Angeles, Orange County, Riverside, San Bernardino, the Coachella Valley, the Imperial Valley, and of course, San Diego. And we are here to help.
Thank you, Rosalinda. And Robert.
Hi, I'm Robert Cafaro. I'm from Banner Bank. I run the branch in Point Loma. I've been with the bank for 11 years, in this office for 9. And the types of products that we offer is really a large variety. We do a good job with consumer lending, home equity lines of credit and so forth, but we also do small business. And so we've got a product in the branch system called a quick step product where we're able to do unsecured up to $500,000 and secured by real estate up to $1 million. And then of course we have our commercial group that is able to do, any deal that will cash flow that makes sense. So we do a lot of the restaurants, big sport fishing stuff. We also do boat loans in our office. So anybody that needs a boat loan, we can do those as well. So yeah, so we have all sorts of things we can do.
Fantastic. Thanks, Robert. And
Thank
Fernando.
you.
Good morning. Yes, thank you again for allowing me to participate. Fernando Ponce with Primary Funding. So we're community-based here, right out of San Diego, 27 years in San Diego. We really focus primarily on asset-based lending. So we use, receivables, purchase orders, inventory. We'll even leverage real estate if, whatever the collateral is that we can kind of get creative to get something done. And typically we're coming in when the banks can't for some reason, right? So we partner with a lot of the banks on here, and if they can't get a deal done for whatever reason, it doesn't quite fit into their space they like to play in, we might be a good option. And ultimately our goal is to get you back to bankability and refer you back to that bank at some point.
Fantastic.
You do a great job, Fernando.
And Miriam.
Hi. So CDC Small Business Finance, we are a nonprofit lender, and we have been doing this for 40 plus years. I've been in the finance industry for about 20 plus years, and we really focus on startup businesses. About 50% of our clients are starting a business, and that could be anywhere from literally you just have a business plan and projections, and they've kind of started to think everything through and are planning with you guys, SBDC, or it could be someone who's been, you know, in business for a year or even sometimes 2 years. We still could consider it a startup. And then existing business owners, we help. We do a lot of acquisitions as well. And yay, our loans go up to $350,000 as of the 31st of May. So pretty exciting. For as long as I've been at CDC, we've been at a cap of $250,000, and now we will be at a cap of $350,000 after May 31st. So that's pretty exciting. Our rates in terms are really good, I think, comparably to a traditional lender for, you know, the risk that we're willing to take. We have a 10-year term, and our rates start at 6.7 and end at 8.7. So that's a little bit about who I am and who CDC is and what we offer.
Awesome. As you can see, it's a diverse type of lenders. And what's also good is you can see that they all do work together and understand kind of where they're at and, you know, the types of businesses they work with. And so that's kind of going to lead a little bit to my next question, which is when a business is coming to you for a loan, what is kind of some of those initial steps, or what is it that you're particularly looking for? Why don't we start with you, Robert?
Okay, so we're obviously looking for a client that's got decent credit. And so decent credit would start at around 680 and then go up. We're also looking for a client that has been in business for at least 2 years. The types of industries that we're looking for are obviously the typical ones. We don't want to do anything with hemp or anything of that name. Well, we can do hemp, but anything that's got to do with cannabis, we don't want to be involved with. The industries overall, we've done all sorts of industries here. So we're open to something that makes sense. And we'd like to develop a relationship and so forth. And then when we can't do that, then we would refer them to someone like the Fernando or what have you, but we've had a good success rate.
Fantastic. And what about you, Fernando?
Yeah, so we're really focusing on those assets. So we really like somebody in the B2B industry, right? So you're selling to other businesses or municipalities, and you're either getting paid on net 30, 60 terms, or maybe you have a large PO that you need some capital up front to mobilize with. So credit isn't typically an issue for us, you know, unless things are like catastrophic at the moment, right? Like you're in the middle of a bankruptcy, or you know, we prefer you're past that point, you know, before we actually get involved. But as long as you're not, you know, currently in a BK or something like that, we can typically get around those credit issues as long as who you're doing business with is creditworthy, right? So we're really going to look at who are you selling to? Are these larger companies? Are these smaller mom and pops? Can we find a credit profile on, you know, on DMB? And are we able to kind of verify, you know, what those terms are in the contract? So we do a lot of front end work on you know, your supply chain and kind of how you get paid and who's paying you. And that's really where we're going to base most of our judgment on. And then ultimately, like I said, if you have assets, I mean, we've had clients that, you know, didn't really have cash flow, didn't have credit, but they had a building or something they could pledge, and we'll figure out a way to leverage that and pull some capital out of that to help you out as well.
Fantastic. What about you, Damien?
Very similar to Robert, you know, 2 years in business, profitability to support the request, credit score of 680 or up. But I also encourage people in the beginning, you know, what is your request? How are you going to deploy it? Where did you come up with that number? Because oftentimes small businesses want a line of credit or a term loan, and we just want to know exactly how you're going to use it and how that's going to grow your business. So also the purpose for your request is very good up front.
Fantastic. And what about you, Fred?
Ours is a credit scored loan program. We use the same model that SBA uses behind us now, the Fair Isaac Small Business Scoring Model. That allows us to approve initial credit the same day we get the loan app. Typically, I tell folks on startups, which is primarily what we do, you need to be in that 675 and up range, depending, and the up depends on the risk of the industry.
Thank you. And Rosalinda.
Yeah, we lend to we lend to startup businesses pre-revenue. Now, in terms of things that we look at is, of course, the credit. Now, we don't have a minimum credit score. However, we expect people to be current on their credit. So to give you an example, if you had a bankruptcy, for example, right after the pandemic in 2020, and it was discharged in 2021, now by 2022, 12 months after the discharge, you will be eligible for funding for your business. So that is an example of someone that might not have good credit because it might be in the 500 due to the BK. If they haven't revealed their credit, they might be able to access funding from us, as well as people with no FICO. So we're going to evaluate the deal based on the 5 Cs of credit, the overall strength of the deal. If there is some weaknesses in credit, of course, we're going to look for mitigating factors that can strengthen the deal. For example, collateral, or money in the bank, or a co-borrower that can strengthen the deal, things like that. The turnaround of the product is about 3 to 4 weeks for the regular full documented loan. For a rapid loan, I will say it will take about a week. But we help our source of borrowers. The most important thing is that they are current on credit at the time of the application. If they have past challenges, we are going to ask about them, but not necessarily take them into consideration for the approval.
Thank you. And Miriam.
So with us, it depends on the type of, if it's a startup or an existing business, but our minimum credit score requirement for all of our loans is a 620. And, we're going to base also, the most important things for us really, because we try to go via reason versus rule when we do our underwriting. And so it really is, does it make sense that you have the capacity to pay us back? And so we don't have a lot of guidelines like maybe a traditional lender would be, where, if you have had a job, you have to have had a job for a year or 2 years, or, we don't have all of those guidelines. I mean, your income could come from disability, from retirement, from, a gift. It could be money in savings. So, but what we are looking for when you're have a startup business is we're looking that you can personally cash flow on your own. So the decision on whether or not you have the capacity to repay back the loan is going to be based on your projections. And so that's why it is very important to work with SBDC and make sure you have a good set of projections, because projections for us will either get you approved or declined. And then in addition to that, we are looking at you globally. So we're looking at you personally as well. We want to make sure that you have the capacity on your own to pay for your rent or your mortgage or your vehicle, your food, all your personal living expenses. We don't want that money for the first 6 to 8 months to be used from our funds. We want our money to be used for you. You're welcome to hire people and whatever it might be to run your business, but you have to show that you have the ability on your own to pay those personal items. And so those are kind of the two things that we're looking for as far as in cash flow. Of course, if you're an existing business owner, then our basis is going to be on, last year's business tax returns instead of the projections for the business. So, that net profit or the actual profit of your business, does that profit show that you have the capacity to continue to run your business and pay our loan? That's what we're looking for. And then if you're acquiring a new business, we're going to be looking at, okay, you could possibly not have a job, right? So you're acquiring a business that has shown in the past that it is profitable, right? And so we're going to be looking at the past 3 years of tax returns to see the trends and make sure that they have been profitable for the past 3 years, and that profit can still cover your personal expenses as well, unless you have, a job or, a spouse that's working or some other source of income. So that's what we look at. I'm really happy to say that pre-COVID, we did not require collateral. So we were not requiring like home equity or anything, vehicles, anything of that sort. And then in the midst of COVID, we did go through like a year or more of requiring collateral. And I'm happy to say that, again, we do not require collateral. So hopefully it'll stay that way again. So that's a benefit as well. And then also something that, you know, a lot of people ask me is, okay, I have, you know, maybe I'm a little bit newer to the United States and I don't have any credit established. That's okay for us. If you don't have any credit is okay. And then if you have a 620 or higher is also okay.
Fantastic. Thanks, Miriam.
Mhm.
So I want to move on to kind of because I think it also highlights some of the work that you do and kind of the how, which is a success case. And kind of, you know, so you feel free to anonymize it, but it's a good way to kind of see the types of businesses you work with and see kind of some of the success and what's really been able to happen with some of your clients. And why don't we start with you, Fernanda?
Yeah, absolutely. So we actually just closed on a deal that a bank fell out with the bank. Client was in escrow to purchase a building, $2.5 million purchase. They were trying to get what's called a corporate liable loan. So they had they wanted no personal guarantee. And unfortunately the bank declined them, you know, kind of close to when escrow was supposed to close. So we had about 14 days to basically come in, put in a loan and get the deal funded. So we were able to get them taken care of. They were able to come in with no PG, and we closed in the 14 days that were necessary. So we moved really quickly, and you know, got the deal done. Their money had already gone hard, so they were pretty stressed out that they were going to lose that, you know, that capital they've already invested into the project. So that was one that, again, just a fire drill, and they had the assets, they had the enough equity that they were, you know, plugging into the project that it made sense, and we were able to move quickly and get it done.
Fantastic. What about you, Miriam?
I'm just thinking of this client that funded last week that I'm just like so ecstatic about it because she had quite the journey. She came to me 2 years ago and, you know, she had this dream of starting a float boat company. And I don't know if you've heard of float boats, but anyways, it's something that's kind of trending. And, and she also does massages, and she's done massages for a long time. And she came to me, and the first time, you know, we were able to pre-qualify her, but unfortunately, you know, with everything happening with COVID, you know, everything got more stringent. And so we had to end up declining her. So she came back to me recently and she's like, Miriam, I have not given up on my dream. And I said, okay, let's make it happen. So I did send her to SBDC because I said, you know what, we are going to have the best projections, the best business plan, and we are going to make it happen this time. And so, yeah, I mean, we even ended up she ended up, you know, she was fortunate enough to get her mom involved with the business just to strengthen her. And, you know, also her mom's like, sure, you know, I'll invest in your business. I'll be part owner and you know, I'm happy to help you. And so we ended up kind of fitting all the buckets that didn't work the first time around. And she, you know, it closed last week and she's ecstatic. I'm just so happy for her. But that's just such a, you know, like teamwork, you know, she didn't give up, and then SBDC didn't give up on her. And then I made sure she was prepared as well. And, you know, the final, you know, the final response was she got approved and funded, and she's finally been able to open her doors. And I'm so excited for her. And I am going to have to try one of those tanks. But yeah, so those are the kind of stories that just make me super happy because, you know, persistence and teamwork on everyone's part. And sometimes I always like to tell my clients, I'll either tell you no, you know, a no is not a no. Like a no is, let me get you prepared and let me connect you with the right people that can prepare you to say yes in the future. I mean, honestly, I can't even think of one person that I've met that is like a no forever. You know, there's usually something that you can do with resources like SBDC and my help and just a lot of people on this panel that care about small business owners, where if I'm not the right lender, we can send it over. But anyways, it's just a happy story.
Fantastic. Thanks, Miriam. What about you, Robert?
Well, recently we closed a deal for a sport fishing boat, but it was for new motors. And so the state's got a program where they will reimburse the owner of the boat if they get new, improved, lower emission engines. And so the client came in and we were able to get both motors. It was about a $600,000 deal. Both motors purchased for him. He gets them put in. We give him the money. He reimburses the state. So it's kind of a good thing, it's helping the green footprint, if you want to use that terminology, keeps him in business. He doesn't use as much fuel. And so that's one of the things that we can do. So not always having to do the whole boat, we can do part of it.
Fantastic. No, I'm familiar with that program. That is a good program for boats, for for tractor trailers and other types of situations. I know that that's a good program through the state.
Yep.
Absolutely. What about you, Fred?
Today's a typical day. We funded 3 different kinds of businesses today, 3 different franchises. Sam the Concrete Man, which is concrete construction type stuff, a Team Logic, which is an IT management group, and then an All Dry, which is a water and mold restoration franchise. So, and they were scattered all over the country, 3 different states. So that's a typical day for us in the startup world.
Fantastic. Sam the Concrete Man. I like that. What about you, Damien?
Yeah, had a client, they had a great service, really believed in the service they were providing, and they're starting to take off. And so the request is for a 250 line of credit. But when we dug into the financials, they didn't have the financial legs to support the request. So put them through our quick score program. It's a shorter application, got them 25,000. And then 3 months later, kept coaching them on how to get the financial legs and tidy things up to be more lendable. And then, 3 months later, we met, looked over the financials. They did exactly what we instructed them to do to be financially stronger. And we did give them the 250,000 just after 3 months. And, banking's a partnership. So every 3 months we have it on the calendar to get together, talk about the business and the financials, and bank wants to grow with them as they grow.
Fantastic. Thanks, Damien. And Rosalinda, you always have great stories.
So with this month, we funded a fitness center in the Coachella Valley. Actually, they received $100,000. It's a startup business, women owned. So we were very excited. This is a deal that they were strong in all the 5 C's. That's what they got, the 100,000. They were able, we don't require collateral anymore, but they pledged some collateral to provide additional strength. They have money in the bank. They have savings that they had in their retirement account, not necessarily wanted to use it for the business, but at least we knew the money was there. They had very good credit. They were able to show capacity, but they had incredible experience. So they were not only fitness coaches, but they had worked with other major fitness centers in sales. So they had a lot of experience selling memberships. So that was a huge strength for that deal. And so they made pretty much all the C's of credit. And that's why we were able to give them the max. And even though, as you know, fitness centers are very risky businesses, right? Especially after the pandemic, we were able to give them the opportunity to start the business from scratch. We're very happy about that.
Fantastic. Thanks, Rosalinda. I love to hear all these stories, but I think why I like to have that question kind of early on is because it also shows what types of businesses and kind of some of the process and everything like that, as we've kind of talked about that. But I want to shift just a little bit because, certainly we've come out of, a little over 2 years of the pandemic, and a lot of things happened, obviously, during it. Certainly the sales, the revenue, the expenses, et cetera, all of that was in massive flux. Certain industries have been kind of gone topsy-turvy, and certainly folks have new things, existing businesses may have idle loans on the books, may still be cleaning up their PPP, et cetera. And so I think my question, the next question of the panel, which is kind of how all of that is now affecting what you're looking at. And I think that could be, any types. I mean, if they're starting a new business, the industry, or if it's an existing business, everything from their books to, what's certainly on there, and, and how you're taking into account things like the idle loan, et cetera. So why don't we start with you, Damien? How is Pacific Premier kind of taking into account or looking at books and revenue and certainly the federal loans into account?
We're very flexible, and traditional underwriting, the pandemic's kind of changed how you need to look at things. The COVID relief money, it's there. So we don't back that out of a business. We just try to understand how did the business do without it? How did it help their business? And how are they trending, since the second half of 2021 and into 2022? And we're really looking at that pattern. Every business has a story, and 2020, it was good for some, it was difficult for others, and others, it really didn't impact them. And it was kind of a steady year. So it's really just kind of that communication between banker and the business owner, understanding the industry, understanding what occurred, and how things are going now. That's the real meat and potatoes.
Yeah, absolutely. Because I mean, it certainly has changed a lot of how you're looking at a business, and it's good to hear kind of some of the flexible ways that now you're looking at things from an underwriting perspective. What about you, Rosalinda? How's Accessity kind of now looking at things?
Yeah, well, for us, having an EIDL loan, it doesn't affect your business at all. This is a 30-year loan, so as long as you as a business owner show capacity to pay the loan together with all your financial obligations, there is no problem with that. No problem with that. One thing that we are very concerned is that a lot of business owners got into predatory lending or high interest loans. So these are things that we're trying to help, but of course we cannot help everybody. It all depends how deep into them they are. But high interest loans, I will say anything above 30,000, about 30% interest rate, we're going to be very concerned, because basically those type of loans drain your business and you will not be able to pay any other loans. So what we are doing with those, if they have they only have one loan like that, we will try to refinance that loan and get them out of that debt to improve their cash flow. And this is definitely a great help. But in general, I will say that we have a lot of applications here in our pipeline. People are coming to us with fantastic ideas and with great recovery from the pandemic. So we are helping a lot of businesses continue to grow and providing them the capital they need for equipment, for working capital, for new contracts. So things are looking very, very optimistic for the rest of the year in 2022.
Fantastic. And Fred, I know you deal strictly with startups, but I mean, how have you looked at industries a little bit differently?
One of the things that we've really noticed an issue with right now coming out of the pandemic, especially with startup borrowers, is addressing employees, where they're going to get their employees. The job markets are pretty tight, especially in some of the service-based industries like yard maintenance, those types of industries. Making sure that the borrowers have really sat down and thought about it and addressed where they're going to get their employees, how much are they going to have to pay them to be competitive with McDonald's and the other people out there fighting for employees these days.
No, certainly, and there's a lot of those types of tweaks and interesting things. So no, that absolutely is a good one. And Robert, what about you at Banner Bank? I mean, how has the underwriting changed? I know because you're dealing with existing businesses that were around beforehand.
Our underwriting has basically stayed the same. We want to tell a story. A lot of the people that are coming to us weren't really negatively impacted by the pandemic. What's pretty funny is a lot of the businesses from a cash standpoint are in better shape than they were before the pandemic. Of course, the big thing is getting staffing and getting people back into the offices or into the businesses. But typically our underwriters, they're going to look at the same things that they did before. And if there's, some sort of a hiccup, they'll want an explanation. We'll do that. And if it was something that was truly pandemic related, they'll take that into consideration.
Fantastic. What about you, Miriam? What about CDC, Small Business Finance?
Yeah, so we are not, during the pandemic, we never took in the PPP in our cash flow, so we never really considered it. And so now, but during the pandemic, we did include in our cash flow the EIDL loan. Now we've stopped including the EIDL loan because, like Rosalinda said, I mean, it's a 30-year loan and it's really small. And so we've just kind of stopped looking at it. And for the most part, I think I shared with you guys, I don't remember if it was last month, but our goal is really to go back to our guidelines that were pre-COVID. So, that's where we are heading, in a strong way. So, I mean, yes, of course, we do care what industry you're in, and we are going to look at what's going on in the market, but that's honestly nothing different than what we did pre-pandemic. What I've seen a lot of borrowers who are like starting a business or acquiring a new business as far as an employees, like let's say a restaurant or something of that sort. I've noticed that now it's, like, oh, my cousin, my brother works for me. I have the support of my sister. And so, they are finding employees. It's just like a little more blood related in those industries, which is perfectly fine and seems like a longer term employee anyway. So yeah, we're working with startups, working with businesses that are existing business owners. I mean, it was such a tough time, and we really are moving forward, and we do feel that the future is bright, and that's how we're treating our underwriting and our guidelines.
Fantastic. And Fernando?
Yeah, we've definitely adjusted our underwriting, a fair amount. We focus quite a bit now, post COVID, I guess you want to call it that, on supply chain. I mean, we really want to understand where you could have hiccups potentially down the road if, there's shutdowns going down in China now in certain regions, right? So is your supplier in an area that could potentially cause you to lose your ability to procure whatever it is you're selling, or so that's one big thing. We also like to see, if your business did kind of shrink down, right, during that time, which a lot of companies did. How did you adapt? Did you kind of like pull in your overhead? Did you get more efficient? Did you really look at where your inefficiencies are and trim some of the fat so that you could survive that? And then potentially now when you're coming out on the other side, if things are starting to pick up for you, what we're hoping to see is those trends now, you're going to be more profitable, right? Because you're able to maybe scale at a more efficient rate. And the other thing, we're kind of keeping in mind is there was just PPP, EIDL, now we're seeing a lot of the tax credits for the employee retention tax credits, right? So these were all, very, very inexpensive, free even, right? Like liquidity that was just coming into the market and businesses were taking advantage of. Well, that's all drying up now, right? And I know, earlier we heard about how there's still a lot of great SBA programs, and there absolutely are. And those are programs that we'll continue to leverage. But a lot of that capital and liquidity that was in the market is drying up now. So you really need to be smart about how you're going about, getting this capital, right? And I know someone mentioned, I don't know if it was Miriam, some of these predatory loans, or Rosalinda, but that went away a lot, because we used to see that all the time. People would come to us and they would have 2 or 3 of these MCA loans stacked, and they were in a tough spot. Well, a lot of that went away during this time because there was a lot of liquidity. So I think, we're going to be looking at that now to make sure, are people going back to those type of loans? Because if they are, for us, it's a bit of a problem. Those loans can destroy businesses a lot of time, and it makes it very difficult for a lender to come in and really provide capital that's going to help with those types of loans in place.
Absolutely. No, and I think there's a lot that's going on. So I think you can kind of hear that so much has kind of adjusted the market, but you can hear the lenders have gotten flexible with things. But what it is that's where you need to come in and really start taking a look at your business and, your business plan, your business model. What are your particular projections? Because certainly that's adjusting for a variety of different types of reasons. And so that's that's what we're here for at the SBDC is as you've heard some of the folks talk about, is we're able to kind of, again, we're not a lender. We have no, particular direct obligation to any particular lender. We're not a broker or anything like that. We just want to make sure you're getting the right loan and you're able to avoid things like those predatory loans, et cetera. So I think what I want to do next is kind of go into always kind of a fun one, which are a couple of tips you have for folks as they're starting to look at accessing capital and what are some of the things that they need to be thinking about, going forward. So why don't we start with you, Fred?
Obviously, the first thing you need to do is make sure your credit's in order. Check your credit report, make sure there's not erroneous information on there, and then put together realistic projections of what it's, in our case, it's going to be a projections deal. So what realistic projections of your income and expenses over the next 2 years? What are they going to look like? We're going to give you an Excel spreadsheet to do those in once we get the loan started, but you need to start planning ahead and really have a solid idea of how much money you need to borrow and what those funds are going to be used for.
No, fantastic. And, one thing I want to point out with credits, you can get your credit report for free in a variety of different ways, but it is very important for you to take a look at that before you do that, because you're doing what they call a soft pull, and you're able to take a look at what maybe there be something negative on there or any of those types of issues. And then even before any other types of pulls are happening on your credit, you're able to either A, have that conversation with the lender, or B, fix that particular issue. So I think those are a couple important things. What about you, Damien? What are a couple of tips from you?
First thing, have your taxes and financials all in order. Talk to the SBDC, and then when you are talking to a potential lender, be transparent. Put all the cards on the table. If you're have a bankruptcy in the past, if you going through a divorce, like you need to kind of tell us up front. You'd be surprised what we can work through. But we don't like finding it out later. It just doesn't go well with the relationship back and forth. So like everything up front, let's put all the cards on the table. And then we try to find something that makes sense for everyone.
Fantastic. Thanks, Damien. What about you, Fernando?
Yeah, I'm going to echo, some of what Damien said. I think it is really important to work with an advisor, somebody that's going to help you, somebody that's going to guide you through this process, especially if you're not a seasoned borrower, right? So if you've been through this a few times and you've already gotten several commercial loans and you know that process, maybe it's not as important. But if you're still kind of making your way, you're a new business owner or your first time in really working with getting commercial financing, working with an advisor like somebody at the SBDC can be really helpful, because the lenders that you see on this panel now are just a fraction of who they work with. And so you can save yourself a lot of time and headache by understanding your business, helping to put the plan together. And then instead of going out and just hitting up, different lenders in hopes of who will be the good fit, they can actually tell you, hey, these 3 lenders are probably the best fit for you based on, what you're trying to do right now. And you're going to have such a better experience, than like the uphill battles that you might have if you don't happen to just get lucky and find the right one right away. So I would say, definitely understand what the scenario is and what the best fit is for your business, so that when you put that packet in, you're going to have a good experience.
Fantastic. What about you, Rosalinda?
I definitely echo what Fernando said. Your SBDC advisor is a funding advisor. They're going to tell you what are the best lenders for whatever is it that you want to do as a business owner. It's important that you share with them all the challenges that you have. Even if you have challenges in credit, you should trust, they are trusted advisors. Now, when it comes to what Danny said, credit is very important. When people tell me, I don't know what my credit is, it's because they don't want to know what their credit is. Okay, so that is a red flag right from the start when someone tells me they don't know how their credit is. So another thing that we have seen, it's important that you be transparent to your lender. Everything that happened to you, you need to share with your lender. If you were evicted, anything, because we're going to do a background check. Some lenders do more extensive background check. We do a very simple background check, but we find liens and judgments on people. Sometimes things might not show up on your credit anymore, but guess what? We might have a lien against you, and we cannot overcome that unless they are over 10 years old. But keep that in mind. Make sure you're current on everything, even on the things that you don't see, right? Like a rent that you didn't pay back when you were living in New Jersey. All that is going to show up. So that's my advice. Stay current on everything and be transparent and be prepared. Preparation is key. And we have the most wonderful resources in San Diego, in Southern California, with the SBDC, helping people review their business plan, make sure the projections make sense. Everything has to make sense for a lender to be able to fund your business. So keep all those things in mind because they are super important.
Fantastic. Thanks, Rosalinda. I'll make sure I paid that rent in New Jersey. All right, Robert, what about you?
So typically what we do is we'll get people that'll want to do some lending with us from COIs. And so they've been kind of vetted already. But when they come in, what we do is we'll sit down with them. We want to see where they are, what's gone on in the past, few years, and where they want to go and what do they really need in terms of money. We don't want them. I always tell them, look, I don't want to lend you anything that's going to make you, stay awake at night and worry, So we want to make sure that what they want to use the money for is a viable idea, one that they will definitely be able to put to good use. I don't like to see people borrow more money than they need. So I want to find out exactly what it's being used for. And then once you get into all of that information, then you'll be able to, we want to work as a partner to them. We don't want to just be a lender and then they disappear. So we want to help their businesses grow, and we've done that. We had one individual, he banked at another bank, couldn't get lending, and he was just overly leveraged. We actually hired a CFO for him and put him back on the path. This guy couldn't even get a business credit card. That's how leveraged he is. Well, today he's now got a second floor on his building. He's got numerous homes he's recently bought and so forth. And his business is going gangbusters, even through the pandemic. So it's trying to understand where they're at, where they want to go. And if you can really get to know them and know their personalities, this guy likes to spend money, so we try to rein him in. So, yeah. So I think it's just all about relationship. It's nothing, cutting edge. It's just old school banking.
Fantastic. And thanks, Robert. No, and I think that is, I like what you were saying, because it's old school banking, which is important. You can have that relationship with your lender, with your banker, and so much has been talked about, which is be open, be transparent, be honest. And I think that's just, always some of the common threads I always hear.
Got to be honest
with you. Yep. Absolutely. Because 100%. So go ahead, Robert.
Thank you, Dan.
Thank you. So Miriam, what about you?
I would say refrain from applying online. So a lot of people apply online and your credit gets pulled as soon as you hit submit. And so in my experience, that's a bad idea. I mean, it's so easy to come to SBDC. It's free. You guys work with them so much. And then after getting to know them and helping them and seeing their project, anybody on this panel, and you guys have so many more connections that you could refer them to. And that's just going along the lines of kind of being more old school and talking to people and getting to know people. There's a lot of people, we're super blessed in San Diego that there's a lot of caring organizations and just even lenders that truly care about a business owner and their business and our community. And so applying, and I think Rosalinda talked about this a little bit, but really honestly, your credit is it's gold. It's, most times it's going to give you an approval or a decline. It's going to put a hold on, a pause until you fix it. I mean, there's so many things that could happen. So, your credit is gold. Don't go along, applying everywhere. And if for some reason you still, you want to come to us directly, have a conversation with us, set up a call, leave a voice message, send an email. At least for myself, like I'm always happy to talk to somebody, spend 15, 20 minutes and see if they're a viable candidate for us. And if they're not, trust me, people know I will refer you somewhere else if I can't help you. So I usually, I've been doing this for 20 plus years. So I usually know kind of where to fit you if I can't help you. But, be honest and take care of your credit. Go to creditkarma.com. It's free. It doesn't hurt your credit, and check out what your credit is. And don't be scared. I know Rosalinda said, if you don't know what your credit score is, it's usually because it's not good, or you might be scared of it. That's okay. Confront it, because there's a lot of help to repair it, or even lenders within ourselves where, a bank might take a 680, credit score. And then myself, I take a 620, and then Rosalinda takes, doesn't require a certain credit score. So, we all work with each other. We all refer back and forth to each other. So, but just take care of your credit, know what your credit score is, and don't go applying everywhere online. I've had clients do that where they start at a bank and their credit score was 750. By the time they come to me, they're like at a 610, and they're a perfect candidate in every other way, but they're 10 points away from that 620 that is my minimum requirement. And it's so sad and such a loss. And so, don't do that to yourself. Just make those connections, make it personable, go old school.
No, and I appreciate that. And so much of what this is, and that's really the point of us having these monthly calls, is to see that there's an array of very, very good lenders that care about you, the small business owner. Every single one of the 6 people on this panel are in small business assistance for a reason, because they care. It's their passion. It's what they want to do. And so that, I think, from Fred to Robert to Miriam and everybody that said this, is like, work with somebody. They're here to work with you, help you along before you just start going out. And so there's a lot of that type of assistance. That's what we're here for at the SBDC as well, is to be able to help you and really help you be able to grow as a small business owner. And so use these resources, and that's really what we're here for. So really, I want to appreciate Fred from United Midwest Savings, Damian from Pacific Premier, Rosalinda from Accessity, Robert from Banner Bank, Fernando from Primary Funding, and Miriam from CDC Small Business Finance. They all put their contact information in the chat, and I appreciate that. And we'll be sending out a recording of this as well. And so thanks to everybody, and have a fantastic weekend, and stay safe and well.